What's up, everybody? In today's video, we're going to be doing an update on our current trade and position and investment in Mobileye, ticker symbol MBLY. The first thing I wanted to point out is we have a almost 7% pullback today. And, the name kind of needed a little bit of a pullback as we broke through this inverse head and shoulders. And we've just continued higher up into the 21 EMA and also with our symmetrical triangle pattern breakout. We've already retested on the daily and we pushed higher. I'm going to show you, this is the weekly chart. I'm going to show you on the daily chart what I'm seeing as well. But just so you guys know, the high five setup we're going to get into in a minute, it's still intact, just to get that out of the way. But let's talk a little bit about the short float. We'll get into the high five setup and then we'll get into my valuation on Mobileye. So the updated numbers as of November 13th, 2024, when we were just up here at $17.31, I thought they got out of more. I thought the shorts covered more, but they're so dumb that they didn't cover. And this large move to the upside was not them. It was not them covering. Unless they covered some and then bought back in up here to short more. That's obviously a possibility, but either way you cut it, we are up about $3-4 from the lows down here. $3 to $5 from the lows down here. And this name is out of the gulag. Everything's trending up. Everything's looking good. And they are still a massive, almost 22% short. The last print was about 22 point something. So they've cut maybe a little less than 1% of their short float. Absolutely insane how dumb they are. This name hasn't even squeezed yet, and when it does, we're going to 20 plus. It's absolutely crazy. So we talked about the short float, right? Now let's talk about the high five setup. We obviously have already the first thing on the high five setup obviously is our charting pattern. We have two of them. We broke out. Like I said, we came up and hit a little bit of resistance here on the 21 EMA. We still have a nice volume shelf that we launched off of with a volume gap up to about $20 to $22 with a price gap right at $20.01. And if we pull up the moving averages here, our 21 moving average is right at 1855 now. It was 1858. So we have that and that move as well. That would come first. And then the gap fill at 2001 and then so on and so forth to 22. And then all the way up here to this large gap fill right here on the volume profile up to almost $27. So we have all those things playing in our favor. One, ugly one. Oh my God, this is terrible. One, we have our charting pattern with a breakout. Already had the retest and we're moving higher. Two, we have the volume profile gap. Three, we still have an uptrending. This is all in the weekly, guys. We'll get into the daily in a minute. We still have an uptrending MACD, blue over yellow or blue over orange, continuing higher with increasing volume, approaching the zero line. We still have RSI that's getting out of the gulag, making higher lows and continuing higher, purple over yellow, bullish. We have our trend that bottomed out and is continuing to uptrend and approach the sweet spot rapidly, red over yellow, bullish. And the bonus I always talk about, I told you all this in multiple of the videos. When we have this break, if you follow me enough, you know that I use the Williams R to predict markets, predict stocks, predict where they're going, along with my high five setup. But what we needed this. We needed a pullback to come up here. Why is this doing this? It's so bad. We need a pullback to come up here and then come back, establish a just like a stock, right? So you have a run up and you have a pullback. When you have a pullback and then you go higher, this is now support. And then you have another pullback and then higher, that's support. And you build that over time. And the more areas you hit off of, the more support you have, right? So no different with the Williams R percentage here. We want to run up above the 20 line, and then we get a nice pullback. And wherever that pullback is, we say, okay, that's our consolidation box. Now we just sit in this thing and ride it as it goes sideways. And as long as it doesn't break down below this support, we are good. And even if it breaks down this support, we need to look at our other indicators and say, do we have two of the four indicators going against us? Or if like we broke down beneath a, charting pattern or broke down off a volume shelf, right? So two of the four, or including the charting pattern and volume profile. So we needed this pullback. We needed to create this support, and now we can continue sideways. They have a big conference today with the Baird meeting. They have another big conference next week on the 21st. They have an investors day, analyst day in December. Um, this name's got a lot of catalysts coming up. They got deals in the works for with multiple legacy car brands and car companies, and yeah, if they land one of those deals, like you're gonna push up high, and you're gonna squeeze. You're gonna squeeze these shorts. Like, there's so many people in this name now, so many people holding on to some shares compared to like in the beginning when it was just me and like one or two other accounts, really buying into this name big and scream from the rooftops how big of a buy this was. And we've been right this whole time, right? Um, but we're just getting started. We are just getting started. So high five setup still intact. We're still good. Just making our support here on the Williams R. So everything's looking good there. Look for a bounce next week or something, or maybe tomorrow. We'll see. But I'm glad we're making the support this week. On the daily over here, it also looks really good. So like I said, we had this run up and pull back and retest, right? And then we just continue to make higher lows, and even this is a higher low. And look where it's stopping. Look where it's bouncing. Your 9 EMA. Your 9 EMA is so crucial and is such a dictator of your uptrend that it's going up and up and up. And when you have these pullbacks, you can expect it to pull back right to your 9 EMA. So the fact that it's pulling back there today and bouncing when the market's weak across the board is just very like such a predictable spot for it to pull back to. If it pull back even more, we'd be looking at $15 pullback to the 21 EMA. But I really don't see that happening unless we just get some really bad news or something. So, and then don't worry about the consolidation up here. I don't want you to get scared. On the daily, the consolidation's everywhere, and I do not do the consolidation boxes on the daily typically, unless I'm in a very, very short term trade. Um, with with this name and it being on the weekly and a longer term name, I do on the weekly. So let's get into the valuation. So here on the valuation, this is basically all a discounted free cash flow model with some added free cash flow yields, forward PE or forward current PE, forward PE, current free cash flow yield, forward free cash flow yield, PEG ratio, rule of 40, which I don't have in there right now, and then this right here is your like what it's worth based on the cash flows, on the free cash flows. So it's a 3 of 6 score, but you have to take everything into consideration. You have China getting back to somewhat of a normalcy. They're stimulating their economy. I feel they're going to be coming out of this recession. Interest rates are going to continue to fall. Inflation will continue. Inflation's fell so hard at this point, and you're going to start seeing um, a hockey stick curve on the auto markets and everything like that. So we are coming out of all the bad and going into the good. Their revenues were down and this year compared to last year, and I think that was a 1 year event because of all the headwinds, right? And now coming out of all this into next year, 2025, they have a lot of tailwinds behind them, which is why I think I don't really take these numbers into consideration too much. just because of the headwinds that they've been facing. But it's still a buy. At a 10-year analysis with a terminal value of 10, and I had this company growing 20% plus basically for the whole 10 years. So to have a 10 on the free cash flow margin, that really should be a 25 when you're talking about 20% plus revenue growth. Yeah, it should be a 25, and you see it's a $44 fair value. Even at a 20, you're talking about a $37 fair value, and even at a 10, the baseline for evaluation on the discounted free cash flow model, we're talking about $23 per share, which is 28% off of where it's at now. And this is considered the fair value, guys. My fair value on Palantir is like way lower. Let's look at it. Look at that. $45 fair value on Palantir. It's 33% higher. So just because it's a fair value doesn't mean that, like, okay, once it hits that price, it's not going to go any higher, like blah blah blah. It's not how things work. That's not how stocks work. There's either extreme bearish sentiment or extreme bullish sentiment. Two names. Palantir has extreme bullish sentiment. Mobileye, getting out of the gulag, they've had extremely bearish sentiment. So yeah, I think it's a buy all day. I think us shareholders will be vastly rewarded. And when the short squeeze happens, I'm thinking it's gonna move with 22% short flow. Basically, the stocks. Oh man, 80% is held by Intel. I really think the stock is going to move big. I mean, when we squeeze, we could go from these levels straight up to this gap fill at 27. I truly believe that. I think we can have a 10 around $10, $8 move with that short squeeze. I really do. So that's my update on Mobileye. I wanted to put this out. I know a lot of people are scared, like, what, why are we selling off? Oh my God, like, what do we do? It's okay. Market's red today. Big pullback today. It's it's what I said was going to happen. When I was talking about the QQQs in the markets, I said, they're getting overextended. They're running into this red line wall, and it's going to pull back what the Williams are. And that's what we're seeing, a small pullback, probably no more than 3%. And then we'll continue higher because it's a bull market and these dips are going to get bought. So that's my update on Mobileye. Appreciate if you stuck around to the video. I'm gonna be going over him, SoFi, Coin, Tesla, and Google, and then we'll see what else I have time for today. But I'm gonna be updating on all my positions. Still holding strong and been buying in Mobileye, and yeah, I'm a happy shareholder. I'm not budging, and I know what's coming. So thanks, guys. See you in the next one.